All right, folks, I don't have much time. Just want to do a review. Today's day 18 in the 2025 bootcamp. Quite a bit on gold with the guys. Still a drawdown, you know, after 18 days. We're still trying to, the bootcamp is basically still trying to find like how many, people placing stop losses. Not placing stop losses, but picking the right lot size, showing them how to calculate and everything. So we paid a lot of fees on that because we'll take losses when we are not supposed to take losses because of things like trading. I mean, partials not taken. Um, you like partials not taken. I think that's one of the best, most expensive lessons so far, and not like placing a proper stop loss. That's like sometimes I think that I'm still working on. Sometimes I'm a bit stingy and I end up taking a lot less losses instead of placing a stop loss at the right place. And mainly that is caused by improper risk management. you know if you are opening up a huge lot size because you believe in the trade that much, you want to risk a bit more, but then that subconsciously you don't want to risk more than you're used to risking on that specific account balance. So you end up not using the right lot size because you're looking at the monetary value that you are willing to lose. You're not willing to put in the right lot size. That ends up being a donation because you're not applying. Firstly, I think sticking to the rules, no matter what the setup is the best thing for a beginner. I'm sharing this for you for your growth as well, as my audience is someone who's learning from me. So it's something that you guys should pay attention to. Obviously, sticking to the plan is the goal. So today is a no news Monday. This is obviously the roadmap, and I'm showing you the step-by-step process to me taking a trade in the bootcamp. So I'm using one specific model, not necessarily one, but it's framed around one thing. So it's like a rinse and repeat kind of thing, and it's been working for me, throughout the you know the years, not years but months, and it's like one of my best. It has the best drug rate for me, so that's what I'm gonna be using on the bootcamp. Obviously sometimes I do read it wrong, but it always delivers. Every day it's there. So coming to this, you want to trade pre-market. So pre-market is anything before 9:30, and then you want to trade the macros as well. They will give you those runs. That's what you're looking for in price action. But going into that, I want to highlight also that this is a weekly chart on gold. Obviously, we closed kind of bullish, but we failed to close above previous. We were bullish last week, not kinda. We were bullish, classic buy week. Okay, open low, went all the way up, and then excuse me, boom. So if you measure from the low of that previous week and to this high, if this high was the weekly objective, obviously after trading and closing above previous week's high, if this is your weekly target and on Friday you're able to take a previous week's high, you want to see a 20 to 30% weekly retracement inside this weekly range right here. Okay, that's a thank God it's Friday. You can clearly see on this chart that we failed to deliver that because it should give us a week that's that long at least. So with that in mind, when you're coming over to Monday, once you take out this high, you must know that you must anticipate a delayed thank God it's Friday. You must anticipate that going into Monday's trading. So that's a delayed thank God it's Friday setup, all right? So this is the 1 minute chart today. Obviously, I'm not gonna do this. This is the 1 minute chart. This is a Monday, 2020, Monday, 24th of Feb, 2025, right? So we were trading in close proximity. Let me go back to weekly. We were trading in close proximity to that previous week's high when I started looking for the setups. We were trading in close proximity to that. Let's go to 60 minute. And this is a structure on 16 minutes. So on 16 minutes, you can clearly see that this is the previous week's high uh, one at the hourly chart. That's the previous week's high. So I found a trade post 8:30 looking for buyers because I could see that it's going gold is still bullish and it's going for that for those highs right there. But since I want to take only one trade a day, I did not want to engage price going lower post 8:30. So you can see here what I normally look at. If I'm bullish, I want to see pre-market range lows being swept, bullish market structure shift, strong displacement post 8:30. I want to buy a fair value gap, going into that my drawn liquidity basically. So now with those levels in mind, the 20 to 30% weekly, thank God it's Friday levels. Those are weekly retracement back inside the weekly range retracements. They are called. You find the setup. Okay, what is a TGIF? TGIF is a thank God it's Friday setup. It normally materializes on Fridays after the weekly drawn liquidity has been met, and then it's a weekly retracement. I mean, it's a retracement back inside the weekly range. If the week has been bullish, it's a retracement back inside. So it means you're gonna find a sell setup, but it has to happen after the weekly objective has been met. If it does not materialize on Friday, it is most likely going to occur on Monday. Sometimes you can find it early on Thursday. If Thursday reaches the high time frame point of interest or draw for the week, then you can anticipate that. Guys, that's almost 2 my time here, so I'm very much sleepy. But going into that previous week's high, uh, up in here, relative equal highs, that was my draw. I found a good setup here, post 8:30. So this deep retracement inside this discount, and then it pushed higher, breaking above this inversion fair value gap. So I wanted to use that in my execution, and then it gave me a nice BC. I bought that stop loss below the inversion fair value gap lows, and then I got like a 1:2 something up in here. But I took off only 80% because gold could give me a little more push. Since it was 8:30, I was hoping to get a little more push to the upside, but I got trailed out here after taking obviously 80% off above previous week's high. Now seeing this displacement inside the macro, because remember we are trading the macros since we are trading on a no news, on a narrowed folder news Monday. We want to stick to the macro. So the macro gave us a short-term shift in market structure, low risk sell. I could clearly see by then the original consolidation. I could see the return to original consolidation, and then first stage accumulation, reaccumulation. Then this is a smart money reversal above previous week's high, low risk sell. Obviously, this fair value gap was respected. If you extend that out, this low here is going to give you, there was actually a bullish order block here, the lowest down close. It acted as an inversion on the sell side of, so I'm actually teaching you now market maker sell model. This was a buy model. This was a sell model. Now, with those levels in mind, after taking a previous week's high, you want to use them as your draw, the 20 to 30% weekly retracement, right? So I'm now gonna do this. I'm not gonna do this so I can show you my annotations here on a smaller time frame chart. So this is what's been happening. This is what happened. This is what transpired post 8:30. So I want to trade the macros after 8:30 on a no red folder news Monday. So I could see that this was inverted bullish inversion fair value gap after I returned back to original consolidation here. And we still have pre-market sell side liquidity in tech, relatively close. This is a beautiful, this is narrative basically. The alcohol will come back to these guys. Smooth orders are meant to be checked. Previous week's high right there, and this was obviously inside the macro here. And also my entry was found inside the macro. Looking for a buy right there too. Previous week's high. This is obviously smart money reversal, low risk sell right here. Distributed, and this is a breakaway gap. After closing below this inversion fair value gap, I knew that it was not going to come back to these fair value gaps. I actually pointed this out on the stream. Those who were on the stream and who listened, they can confirm that. So now everything that was used on a market maker or buy model is going to be used as an inversion on the left side. So every PDRA that was respected, look at this bullish inversion fair value gap, look at the bodies staying inside that, and also it acts as an inversion of that. And the opposite of bullish inversion fair value gap is a bearish one. So look at the bodies. I'm now going to do this. The body is staying below the midpoint at the lower quadrant and then sell off. It did not come back to these imbalances here. They stayed open. So sell off to pre-market range, sell side liquidity, and also to this sell side liquidity. But most importantly, to what level? 20% TGIF level, and then eventually the 30%. Look at the bodies respecting the 30%, and then soon after that, it went all the way up and never really came back. So it's been going higher ever since. So it's just a short review of what had transpired today and how to anticipate a delayed model. I'm sorry, a delayed thank God it's Friday setup that you normally find on a Monday. It can be early on a Thursday, but I just showed you how to anticipate and how to know and how to trust these setups. Okay, so I hope this was insightful for you, to you guys. Yeah, this is day 18 in the bootcamp. More wins are coming. It's definitely gonna go to 100,000. I'll see you guys next time. Cheers.